Welcome to another easy algo training. In this training today, we're going to go through how to use indicator X and also show you how to use it in combination with imbalance X. This is going to be a very exciting training because I have added some new features onto imbalance X and I'm going to show you how to use it. I'm going to talk about all the improvements that we've created with it. So get your coffee or tea ready and prepare to enjoy this training. All right, guys, here we are. So looking at the chart, we've got PopCat over here, and I've applied the new Imbalance X indicator. I want to talk a little bit about the enhancements, and then I'm going to show you how to use it in combination with indicator X. The closer and closer we get to understanding and perfecting Imbalance X, the better our trades are going to become. The more I'm starting to realize how important it is to understand these fair value gaps and these separations between candles. You see, as soon as you get separations between the candles over here, see these massive candles. As soon as you start getting these massive candles, it's showing you that there's momentum that's pushing the candles away from its range. And this is showing us the price is opening up. There's more demand coming in the market or more supply coming in the market. And these round trips, you see, every time we get a green dot, it's a bullish round trip. Every time we get a red dot, it's a bearish round trip. And depending on the time frame, can really help us understand what those higher time frame players are doing. Remember, guys, the higher time frames are the guys who drive and move the market. These are the market makers. They operate from this higher time frame perspective. So for us to understand when truly the market is going to start changing direction from bullish to bearish or from bearish to bullish, it's important for us to understand how these gap separations work. If you haven't already watched the first Imbalance X training, go through the live training and find the video and watch it, because this is an addition and add-on to that. So let me talk about some of the new features we've added into it. First thing we've added is we've added a real-time feature. So now there's no more lagging with this indicator. It is exactly real time. And the real-time functionality applies to the multi-time frame. So it doesn't matter what time frame you're on, it's going to show real time now what is happening. We are still continuing to work and improve this indicator because there's still a few things I have not achieved yet with it, which we're working very hard with the coder to develop, but it's getting more and more perfect every time we bring a new version to you guys. The second thing we've added, I don't know if you guys have noticed, look at this dashboard here. This is a very cool feature we've added, guys. Can you see now? Now we have the ability to add 4 different time frames. Time frame 1, 2, 3, 4. And you can add a time frame of your choice, whatever time frame you want, and then you can monitor exactly what is happening within these round trips. I'll give you an example. So you can see over here, we're on 12. I'm on the 12-hour time frame, and you can see it's still bearish, so it's red. If we go to the 8-hour time frame, you can see it's still bearish. You see what's happening. We've got this dot, but the candle hasn't closed yet. So only when the candle closes, when this candle closes, are we going to get this 8-hour that will turn green. So the green dot arrives as soon as we get the candle separation, but the dashboard will only change color after the candle close, which will give you more confirmation of what has actually happened. So you see we've got these 4 different colors now showing us. Now we can monitor 4 different time frames. We can know exactly what's happening. So let me go to the 4-hour now. You can see the 4-hour has already, I think it's already closed, or it's almost closed. So it's showing you the green. If we go to the 1-hour, you can see the 1-hour has already closed and opened. So you can see right now, you can see what's happening. We're slowly moving from the 12-hour to the 8-hour to the 4-hour to the 1-hour, and we're catching up. So it's important to know that whatever happens on these higher time frames, you can see the 12-hour kind of confirms what is going to be happening within the higher time frame movement. Remember, the market makers move price on these higher time frames. And we go down to the lower time frames, and we can coincide our entries. So another feature that we added, there was a bit of a lag with the multi-time frame functionality. You can see right now, I've got it set to an 8-hour chart. So it doesn't matter what time frame we are on, it'll only show the 8-hour chart. So you'll see if we come to 1 hour, it's going to show us the 8 hour exactly, but we can be on the 1 hour. This is what makes this so great, because we can drop onto a lower time frame and we can look for entries, but we can still observe what is happening on the higher time frame bias. Remember, guys, this is like an EMA. This is like the ultimate EMA. It is a price action EMA, and it will help us understand what is happening within these fair value gaps on the higher time frames. So for instance, I'm going to show you exactly what we fixed. So right now, if we're on the 12-hour time frame, let's see, this is set to the 8 hour. If we come to the 8 hour time frame, and what I'm going to do is I'm going to, every time I see it, I'm just going to draw a red line on the dots. This is a great way that you can back test as well, and you can start understanding this process. So do this along with me, or just remember how I did this and then practice it later. So you see, I'm just putting it on the dots, and I'm on the 8 hour time frame. It's set to the 8 hour time frame within this display of fair value gap continuous trend lines. So basically, it's just showing us fair value gap trend lines, and it's measuring the start of the fair value gap till the end of the or the start of the next fair value gap. And the space in between is the round trip. So when we get a green dot, it's the start of a bullish round trip. When we get a red dot, it is the start of a bearish round trip. Remember, this is not 100% accurate. Nothing in trading is 100% accurate. But after back testing and forward testing and testing it a lot, you can tell that this is going to yield some very good results. And I know it's going to help you guys massively. Remember, this is a real-time price action indicator. There are no settings for it. The only thing you change is the time frame measurements. So now we've got this set to 8 hours. You can see I've marked the 8 hours. So then we can go to a time frame where we look for entries. If you're going to look for entries on the 15-minute, you'll see if we come to the 15-minute, can you see exactly where the dot is? It lines up. Exactly where the dot is, it lines up. This was the challenge we had with the previous version. We managed to fix it and get it more accurate. See, perfectly lines up with the dot. It is now showing in very much real time. So when you get a dot, it's going to happen exactly when it happens. So you know from that point onwards, you can start to look for your entries. Okay, so now we can take those lines away. Now what I'm going to do, guys, those are the shifts that we've had. Remember, it's just the dashboard. So right now I'm on the 15-minute time frame, but I can see on the 12-hour time frame, we're still in the bearish round trip. On an 8 hour, we're still in the bearish. But look, a 4 hour and 1 hour have become bullish. So it is very possible that that 4 hour can ripple to the 8 hour and then to the 12 hour. And if we start seeing the 12 hour and the 8 hour go green, this is showing us that there's higher time frame money entering into this asset. Once we have higher time frame money entering into the asset, we have a very good understanding that we can look for longs or look for shorts because we're supported by the higher time frames. Remember, the most important thing, the most important aspect of the imbalance X and indicator X strategy is, number one, understanding your higher time frame bias. This indicator will help you understand the higher time frame bias by observing what are the higher time frames doing. And you can also move this into lower time frames. So if I wanted to move this maybe into a 15-minute, let's say 15 minutes, and then let's just say 1 hour, and then a 4 hour, and then an 8 hour. There you go. So look now. So now you can see 15-minute, 1 hour green, 4 hours just turned green. So look, we can see on these time frames, we're green, green, green. So if you are a scalper, a small time frame scalper, maybe scalping on the 1 minute or the 5 minute, you can start looking for longs now only, because longs are in your favor, because it's showing us now there's more demand entering in the market. And when there's more demand, we're looking for longs. If these were all red, then I'd be looking for shorts because there'd be more supply entering into the market. So this is going to be a great tool just as an additional guide, just as an additional companion tool to keep you on the right track and understand, are you looking for longs? Are you looking for shorts when it comes to adding indicator X? So now we add indicator X onto our chart. And remember, anything under 1 hour time frame, we're going to use 3 and 3. Anything above 1 hour time frame, we're going to use 2 and 2. A lot of people ask this question. So we are going the 15-minute time frame. So we're going to be on a 3 and a 3 contraction swing size. So you can see over here, guys, if I just backtest, look how obvious it is. It is fantastic. So let's just go over here. Let's start at this position. So you can see we got our dots. Can you see we got our green dot? When we get the green dots, and just to let you know, this is on the 8-hour time frame. So it's showing us round trips on the 8-hour time frame. Once we get an 8-hour dot confirmed, this is a green dot. This lets us know now that there's a bullish sentiment in the market, a possibility of a bullish round trip starting. So you can see we got the dot over here, and then straight after the dot, we got this big move to the upside, which was 25%. It was massive. So there's a possibility you might have missed this move if you were entering on the 15-minute time frame. If we were to go down to the 5-minute or the 1-minute or the 30-second, you'd probably see there would have been many entries into this move. But if we were looking to enter on the 15-minute time frame, no problem. We would just wait for a 15-minute master pattern to arrive. You can see over here, this is the first contraction that we get. This is the first cycle. This is the first thing we look for in the 3-phase cycle is the contraction phase. When we get a contraction box, it's letting you know it's starting. When we get that box, we can start getting prepared because this is a leading indicator. We know what is going to happen next, and what is going to happen next is the expansion phase. So we're anticipating that price is going to go into the expansion phase, and because it's in the green, we're anticipating to look for our long entries when price is underneath these value lines. So you can see whenever price is under the value lines over here, we're going to look for our long entries. And you can see we had some fantastic entries we could have taken. Remember, I always like to check it with the TDIX for extra confirmation. If we look for the TDIX, look, this one we didn't really get a shark fin, so maybe we wouldn't have taken that one. This one we got a slight shark fin, still not 100% confirmed. But this one over here, you can see we got a shark fin over here. And then we actually got a divergence. Let's see. No, it wasn't a confirmed divergence. But one of these would have been best to take, even though, okay, the TDIX did not confirm any of these. But this one was still a little bit, you can see we got a shark fin over here. And maybe we would have missed it. So these ones weren't super clear, but as you can see, they still worked out very, very great. We could have kept going. And here we go. If we kept going, you can see until we get the next contraction, get a contraction, and then we get two places where price is underneath the value lines. Remember, on the 8-hour time frame, we're still green over here. So it's letting us know, this is the great thing about Imbalance X. It's letting us know that we can continue to look for longs, but because we are still in the green. And then look over here. We get a fantastic shark fin. We get another fantastic shark fin. These would have been two absolutely incredible entries you could have taken. If you had entered here or you entered here, you would have gotten fantastic entries. You would have just had to have a little bit of a longer stop loss if you entered here, because if you'd entered at this point, price did retrace 3% or something like that. But even if you got stopped out of this one, you would have entered this one. Look, guys, our confluences, we got green on Imbalance X. We got master pattern forming, prices underneath the value line. We got shark fins. We have all the confluences that give us confidence to enter these trades with success. And then you can see, look at that, price just exploded after this, guys. It took off 30%. That's amazing. And then we get another one forming over here. You can see another contraction. And every time price is underneath becomes an entry. All of these would have been entries. This would have been an entry. And then we go into the TDIX to look for confirmation. And you can see over here, we got a very small shark fin. Could have still been something. Here we got a great shark fin. This one over here. This one we didn't. So these two over here would have been the two we would have looked for our entries. And remember, guys, it depends what kind of a trader you are. I often speak about this, that identifying the kind of trader that you want to become will give you clues into whether you want to hold these trades for longer or shorter and how you want to actually do that. But if I turn this, I'm going to turn this up to show more. Remember what I'm doing now, when I come onto the liquidity swing sizes, if I turn them down, I'm going to get more of these swing sizes that are going to show. See, there you go. See, now I've got more showing. If you want less to show, you just turn it up and then you show less. So if you want only the maximum and higher swing sizes, you turn this up. If you want all the little swing sizes in between, you turn it down. So I've just turned it down for this example. So if you'd entered over here, the reason I want to show you is because if you are a scalper, you could have just entered and exited your trade quite soon. If I had entered on this entry here, remember we got a great confirmation. Look, we even got this very nice candle rejection showing possible reversal. If we had entered on this candle, say we entered our long, stop loss would have been underneath the swing low. Okay, so it would have been a little bit of a big stop loss, 2.78. But then our first target would have been the value line for 3.62%. Our second would have been the next liquidity line. And that would have been remember, the first is the value line, which is your safest. Your second is the closest liquidity line. If we target the closest liquidity line, there still would have been a 7% profit. This is massive. And also, if you had gone for the highest liquidity line, that would have been 11% profit. And you still would have got a very successful trade if you had done this. So remember, I don't know what kind of a trader you are. If you like to just take little pieces out of the market and exit and re-enter, that's kind of the trading I prefer to do. But every trader has to figure out their own trading style. So then if we continue down here, you can see we didn't really get too much. Price broke down below here and then completely broke down. So here's another example. You can see we got contraction, and then we got the green line. So we're only looking for longs, and then prices under the value line and prices under the value line. And remember, I'm checking the dashboard as well. Dashboard's looking good. Green, 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 green. So we're looking for longs. It's just another excellent tool. Remember, guys, trading, there's no strategy that's going to work 100%. But we have created amazing tools to help you keep you on track and give you all the confidence you need to make winning trades. Trading is about looking for data, looking for information and putting it together and then creating probabilities from that information. And those probabilities give you surety and give you confidence. So these two would have been great entries. Let's look on TDIX. TDIX gives us a divergence and a divergence. So these both could have been great entries. We had two divergences. So you can see if we'd entered this one over here, we could have just targeted the value line for 2%. If we wanted to get up to the first liquidity line, which would have been this region here, would have had 3.92%, and we would have exited the trade. Sometimes it's better to take smaller amounts because look, imagine we had wanted to target higher. We would have lost all that money. So this is the thing with trading. Price does not move in a straight line. It moves up and down. That is why it's very important for us to be able to make good decisions. And, we want to exit the trades in profit. And sometimes it's better to make 2%, repeatedly than aiming for a 10% and not be able to achieve it. It's much easier to make 1, 2, 3% profit per trade than it is to make 10% per trade. So this is where you have to discover what kind of trader you are and what works best for you. I just like this trading because I can be in the trade, I can be out quite quickly, and then there's no stress. There's no me, waiting the whole night, struggling to sleep, not keep checking on my trade, those kinds of things. The other entry would have been over here at the second divergence, which would have been a winner as well. If we'd entered after the divergence, if we'd just focused on targeting the value line, we would have made almost 3% and we would have risked 1%. So that was a 1 to 3 just by targeting the value line. If we targeted the first liquidity line, which is the second best place, we would have made 6% and we would have risked 1.17%. So the ratios are very good. And there you go. Here we get another fantastic setup. Guys, this works so ridiculously well. If I was on the 5-minute time frame, we would have had a lot more entries, but I'm on a 15-minute time frames give you very solid entries, less dilution. Remember, the lower down the time frames you get, the more diluted it becomes. And that is why I actually created this multi-time frame function, because you can be on a lower time frame and you can still observe what is happening on the higher time frame, because the key to being a successful trader is understanding the market bias, the direction of the market. if you can successfully understand the direction of the market, and that's why I create this, then you will be able to enter your trades with more accuracy. Instead of entering short when it should be long, you'll enter short when it should be short and long when it should be long. And we'll use Imbalance X to help us along this track. So you can see over here, we still got green Imbalance X over here. We have a new master pattern cycle starting, contraction box. So now all we do is we wait for price to come underneath the value line. Okay, just because price crossed over this green imbalance X line doesn't mean anything. It has to actually create a red dot or a red line for us to change our bias. So this would have been a fantastic entry. If we have a look on the TDIX, oh my gosh, look at that. That is an amazing shark fin. Guys, these are the shark fins I always talk about. It's the V. When you see a V shark fin like this, that is where you want to pay attention. These are the shark fins that always give us nice big reversal bounces. And you can see we got that here. We had all three criteria. First of all, we had the green imbalance X showing us we're only looking for longs. We had our contraction cycle, contraction phase start. Price is underneath the value line. We've got the green. We've got the TDIX shark fin. Three incredible confluences all converging in one to give you a fantastic confidence to make this decision. If we'd entered over here, remember we would have probably entered only at the close of this candle. So this one, because it had such a big candle close, it would have been a little bit more of a risk. You can see we're risking 4% on this trade. If we'd targeted the value line, we would have only made less than 1%, so it wouldn't have been good risk reward ratio. If we targeted the first liquidity line, you would have risked 4% and made 7%. If we targeted the second liquidity line, we would have risked 4% to make 11%. So these are the kind of final decisions you have to make as a trader. I can't tell you, no one can tell you exactly where should you take your profit, at the value line, at the first liquidity line, at the second liquidity line. We never know how far it's going to go. The safest is the first value line. There's a higher probability of hitting at the value line first. Then the second highest probability is the first liquidity line, and the third is the second liquidity line. So you've just got to figure out exactly how you like to trade things. So here we go again. We got another great example. You can see we still got green. So we're looking for longs. We've got another contraction starting. Price is under the contraction over here. So at this point, this is probably the place we would have considered entering because we got a lovely shark fin. We actually got a super shark fin. So guys, when we get the green dot, it means we're getting a shark fin in an overbought or oversold region. In this case, we're getting a green shark fin within an oversold region, which is a stronger confirmation. So this is the place where we would have looked to enter our trade. We would have entered right over here, anticipating that it was going to go back to this value line. It didn't do that, but we were still fine. So stop loss would have come under the low. You can see we would have targeted the value line, which would have been our first target. So risking 1.7% to make 3.98%. And then we basically got another contraction start and we had the same thing playing. But if we're in this trade, we would have done very well, actually. You know, the first liquidity line was this one over here. It's not showing. We might have to lower these lows because, guys, this measures the swing sizes. Oh, there you go. Now it's showing. See, so sometimes when we're on very slower swing sizes, it's going to show all the liquidity lines. When we've got higher swing sizes, it's only going to show the major liquidity lines. So once again, if you are a scalper, you want to turn this down so that you can see more of the liquidity lines. If you are a swing trader, you can turn it up because then you're only going to focus on those higher swings. So if we'd entered this position, we would have exited for 7% profit and our risk would have been 1.7. So that's a 1 to 7 trade. Absolutely fantastic. So then look here. We do not get another master pattern forming, so we do not enter. Then all of a sudden, look here, we get a red dot. And remember, guys, this is the 8-hour time frame. This is an 8-hour bearish dot that is just printed. So now from this point onwards, you can see we've got a red dot here. I'm going to change this to red. And over here, you can see we've got the red over here. So from this point onwards now, we're only going to look for sells because it's confirmed it. We're only going to look for sells. So then what we do is we wait for the next master pattern. We get a master pattern forming here. Whenever price is above the value line, that is where we're going to look for our short entries. Let me just change this to be red as well. There you go. So these are the precise locations. We're going to look for short entries. And then look here, we look on the TDIX for confirmation. And we've got a divergence over here. So this would have been our winning entry. So we would have looked for our short position at the close of that candle. Stop loss just over the high of the candle. So we've got a 2% stop loss. If we targeted the value line, it would have been 1.43% profit. If we targeted the first liquidity lines, probably would have taken this low liquidity line because those were relatively close. We would have been risking 2% to make 3.8%. If we were brave and we targeted these low liquidity lines, then we would have made almost 10% profit, risking 2%. Absolutely fantastic. So here we go. We keep going. And you can see another contraction starting. Wait for price to get above the value line. Imbalance X is still red, so we're only looking for sells. And you can see, once again, this would have been an amazing short. So guys, this keeps you on track. I've been back testing this a lot, and it works fantastic. On most of the tokens, it works like wonders. Some tokens, it does work slightly better. Popcats that I've been trading for a long time. I'm sure you guys know because I'm always talking about it. It works fantastic on this asset, and that's why I like to use it on here. There you go. If we'd entered at this position, we would have risked 1.74. And if we targeted this major liquidity here for 3.4, if we targeted this double liquidity line at the bottom here for 6% profit, 1.74% risk, that would have been a fantastic, fantastic trade. So once again, we keep going, guys. Same thing applies. I mean, the strategy is relatively simple once you understand these factors. Factor number one, higher time frame bias. You can see our 8-hour time frame on the higher time frame is showing red. So we're only looking for shorts. And we got a contraction box starting over here. Every time price is above value, we're going to look to enter our short, and we're going to look on the TDIX for confirmation. As you can see, we get a shark fin. So this becomes our entry. So we enter our short position over here. Stop loss just above the swing high. First target, the safest target is always going to be the value line, but you're going to make a lot less by targeting the value line. The second best target is the first liquidity and then the lowest liquidity lines. So even in this trade, we could have still made risked 1% to make 4.87%. Very fantastic. You can see, and obviously price did go further and further, and that depends on what kind of a trader you are. If you're more of a swing trader, you would have taken these entries on possibly a 30-minute or a 1-hour time frame. If you're a scalper, you can scalp the 15-minute, the 5-minute, the 1-minute, and the 30-second. If I have to go down to the, like I said, the 5-minute, the 1-minute, 30-second, there'd probably be a lot more trades for you to enter. So here's another example. It's a very interesting one. You can see Imbalance X, we're still bearish, so we're only looking for shorts. We wait for the contraction box here. And then every time price is above the value line, we're going to look for our short entry. This was one of them, and this was one of them over here, where these two examples. So now let's look on the TDIX to see which one gives confirmation. This one still would have been fantastic. That would have been an entry. And this would have been an entry over here as well, because we got a red dot. So those would have still been good entries. But look here, if you had entered over here, say you'd entered on that break, stop loss, risking 2%. If you had targeted the first liquidity line, it wouldn't have made it there. So you see, sometimes as a trader, you have to anticipate that price is not going to get to your target. So you either got to act extremely fast and cut the trade, or take the stop and then re-enter. In this case, we would have been stopped out, and then we would have re-entered. Then price got high above here. You can see, and then we got very nice super shark fin. Also note, guys, look at these candles. These are candles showing weakness. This is an inside bar over here. An inside bar is when you got a candle inside another candle. If we turn on the 2-bar master pattern, which I haven't even gone into detail teaching you guys this, but if we turn it on and I turn on onto the 15 minutes, There will be a time where I'm going to be training you guys on how to use this for sure. But I just didn't want to confuse. Can you see they got an inside bar there? So the 2-bar master pattern actually measures inside bars on multiple time frames. Inside bars either show you a place on the chart where there's going to be reversals occurring or there's going to be continuation. In the near future, I am going to go into more detail about how to use inside bars to continue this strategy. I gauged the group and I see how much everyone knows, and I'm going to be building the strategy slowly, just making sure you guys all grow properly with the strategy and you start getting consistent results with it. So over here, this would have been a fantastic place to look for our short because we got super shark fin. We saw these doji candles. Can you see? These are usually showing weaknesses happening in the trend. So we might have only entered our short after we got this engulfing candle. Can you see? So this engulfing candle would have showed a lot of confidence because all the other criteria matched up. And then we saw the engulfing, we entered. So our first profit target would have been the value line. But you see, we would have been risking 3% to make 3%. That's still a 1-to-1 trade. It's still fantastic. Otherwise, we would have targeted the first liquidity line, which would have been 6% profit, risking 3. So it's a 1-to-2, which would have still been a great, great trade. And then you can see price gets above the value line over here. This is the point where it does become a bit tricky when we get this transition over. So you can see over here, this would have been a place we would have looked for an entry. Everything is showing we got, the red imbalance X. We got price above the value line. We've got divergence or a super shark fin. So we possibly would have entered our short position over here. Stop loss would have just been above the swing high. And we targeted the value line. And look, it did not even make it that far before we got the change over. Now, in real time, where we are standing right now in this moment, PopCat has a 15-minute green, 1-hour green, 4-hour green, and it's turning over to green dots. Let me just change this over to green as well. You can see green dot, green line. So now we're going to start looking for long entries. So all I'm doing now for PopCat is I'm going to wait for a contraction box to form. Our lovely contraction boxes. Once we get the red box forming, once this happens, then I'm going to only look for entries when price is underneath the value line. That is it, guys. I'm going to wait for this kind of setup to happen. And I'm going to enter when price is underneath here. Let me change this to green. I trust that you guys are really starting to understand the strategy. And then every time you watch these videos, it gets clearer and clearer. And you get a few breakthrough moments, even if it's just 1 or 2 pieces of the puzzle that start clicking together or making sense inside your mind. Because there is a lot of little moving pieces, but the more you focus it, the more you watch these videos, the more you attend these trainings, the more it's going to come together piece by piece, and you're just going to suddenly understand it, how it works. So these would be our next entries. Wait for a contraction box, price to become under the value lines, and we look for our longs in combination with the TDIX. So guys, that is this complete indicator X strategy. When you use it in combination with when you use it in combination with Imbalance X, it is an incredible strategy. It really makes things very easy for you guys. Obviously, it's not 100% successful. There is no strategy that will be 100% successful because you're trading in a market where the manipulation occurs, where the people are anticipating who knows what and constantly checking the market. But if you understand the strategy, it's going to get you 60 or 70% of the way there. And then it's just probabilities that will move you into your favor into becoming a successful trader. Thank you so much for tuning into this video today, guys. It's been a fantastic training. I hope you got a lot of value. Hope to see you at the next training. All the best. Take care and happy trading.